What's your best trading lesson? So I have had the exceptional, extreme privilege to be mentored directly from Mark Minervini and my friend Steve Burns. Two quotes they said to me got me more than anything that I've ever heard. Mark said to me one time, "This is why your trades suck." That one hurt. That one hurt my ego really hard. I know you guys have heard me say that. And then Steve saying to me one time, I used to see, I thought I was being clever. I thought I was being smart. And I was showing him how I was being clever and I was being smart. And then he said to me, "Hey, you know what? I used to trade that way too, but then I realized I wanted to make money."
This is the How to Trade Stocks and Options podcast, brought to you by 10MinuteStockTrader.com, where we cover finance, stocks, options, entrepreneurship, education, and money. And here's your host, voted one of the top 100 people in finance, Christopher Ewell.
Are you ready to finally learn how the market really works? Well, now's your chance. I have a free book for you over at secretinvestingbook.com. And this outlines 13 of the biggest secrets that Wall Street doesn't want you to know, like how to get a positively unfair advantage in the stock market. This is everything you're going to need all in one place. And the way to get this is by going to secretinvestingbook.com. Now, this book is free. It is free for you. I paid for the book. I just need you to help me out by covering the shipping from our office to your house. So go to Secret Investing Book right now, get your free copy today, and I'll ship this out right away, and you can get the positively unfair advantage in the stock market by reading these 13 secrets that Wall Street does not want you to know. So get your free book over at secretinvestingbook.com today. The How to Trade Stocks and Options podcast is now exclusively on sharevision.com, the first dedicated streaming platform for the world of finance. And that's where you can find us every single week over at sharevision.com. Just head to sharevision.com to learn more and type in 10-Minute Stock Trader in the search bar. Come like and subscribe. I can't wait to see you over there at sharevision.com, the first dedicated streaming platform for the world of finance. Good afternoon, traders. Happy April the 6th. Got to be every time the intro just makes me feel all the warm and fuzzies. I'm so glad that we can be together again today. It really, honest to goodness, is the highlight of my day to be able to hang out with you guys. So if you are here hanging out, let me know. I have no idea who's here until you say hi, and I would love to say hi right back to you. I have a jam-packed trading room today as well. I also need to cut this a little bit shorter than I normally go. Money Mitch and I over at Benzinga, we have a meeting before the Benzinga episode that we do on Wednesdays at the top of the hour. And today's a defensive day, so we're not going to be putting on any trades, which makes things a lot faster and easier. Good afternoon, Donna. I am so glad you are here. Good afternoon, Cindy. Glad to see you as well. Cindy was texting me over on Twitter, asking me about extrinsic value, asking me about theta. And I was like, Cindy, these are excellent questions. You have really, really picked up on something here. You're doing a great job learning and also a great job of asking questions. And so basically, the way we have two real different methods of trading here, right? We have the selling options, which is what I teach inside of the AI stock trading system course. Then we have the buying the deep in the money options, which is really what we do on a normal basis day to day. There's a very different leverage component here between the two, and a different win rate and a different return between the two. And theta is something you really want to sell the most of and buy the least of, which is why when I teach that inside the AI stock trading system course, I say, I focus on the 30 delta, selling the 30 delta puts. Whereas with the buying the deep in the monies, we try and get our extrinsic value down to as low as we can, 20% or less. So yeah, excellent questions. And yeah, definitely something we have built into our trading plan. I'm really glad that you got that, Cindy. Brian is here. Awesome, awesome, awesome. Victor is here. Glad you made it, my friend. Kavan, I have a member highlight on Kavan today. Very excited about this. We'll do that in just a minute. Maria, sorry, I tripped over my words there. Maria, I am so glad that you came today. Thank you so much for joining us. Speaking of member highlight, let me go and do that real quick. First, I really want to showcase Kavan. I'm really mega super proud of him. So Kavan sent me a Twitter message. By the way, like I said, obviously you guys can always Twitter message me or anything else. I'm always here for you. Kavan was saying how he got to watch his interview, which let me backtrack just a second here. This is a privilege that I am giving to you guys as part of being in the trading room. Is I want to give you a one-on-one. There's no sales call. There's no pitch. There's nothing like that. It's you and me. Ask me every question you want in the world. I am here for you. And if you want to go see what it looks like, just go watch the interview that we did with Kavan. I want to do this for you guys. So let's start lining that up. Back to Kavan, member highlight here. He was rewatching his interview. He wants to learn even more about the relative strength, which is awesome. That was one of the webinars we did recently. If you go in the 10-minute trading room and then go to the private members only live training and then go to how to find beast mode stocks, this really goes deep into relative strength and why that's so important. So going back to Kavan's email here, he had several questions here. And Kavan, I'm pretty sure that these are the questions that you had from your friends. If not, I'll be glad to talk about these. But I think these were the questions that you probably had an opportunity to talk to your friends about, which is awesome. Because he was saying he had his guys watch it. They had several questions. They're taking notes. And now they're ready to get into learning more about this, sacrificing their sleep time. Don't sacrifice time with your family. Sacrifice your own sleep time. That's what I did for sure. Sacrifice your sleep time to learn. Because the game that we play is the greatest game in the world, without a doubt. And so I said, dude, that's awesome. You guys know this is what drives me, is the wealth ripple effects. And so I said, that is so awesome, Kavan. This is the wealth ripple effect in practice. And you, Kavan, are impacting those people's lives. So Kavan, to you rock, my friend. I'm so proud of you. I'm so proud of all you guys. You guys are really coming along. Like I've said this before. This is not get rich quick. This is not a boiler room high pressure situation. This is a lifestyle, and you can make it happen. So really, really proud of you, Kavan. Speaking of lifestyle, don't forget to work this into your lifestyle on Friday, 8 a.m. Central Time, 9 a.m. Eastern Time. That would be 6 a.m. in California and 5 a.m. in Alaska for Isaac. But we will be talking about how to finally trade without regrets, finding and keeping the profits just like the pros do. So be sure to make some time for that. You guys don't need to go register. I just need to make sure that you are available for that live training. That way you can ask questions and we can work together. The links for this are already coming to your inbox every day, so be sure to check that out. Kavan says, thanks, you too, man. You rock, my friend. You rock. All right, let's get right into today's trading with our market analysis. Oh, man. Didn't have my PowerPoint up fast enough. Too slow on the draw, Chris. Welcome to the 10-minute trading room. This is how to trade in only 10 minutes a day and exactly how to take the guesswork out of trading. Now, this is the 10 minutes to freedom trading strategy that we are using here, and it always and forever will start with the market. The market consists of three core components, which Kavan had written down on his notepad over here. The S&P 500 moving averages on the 10 and 20. Tell you what, let's go over using Kavan's notes for this. The 10-day needs to be over the 20-day. So let's take a look at that. So this is the S&P. The 10-day is the blue line. The 20-day is the black line. That is still true. Price needs to be over the 50-day, which is flirting with today. Clearly, there has been a bearish change of sentiment here, and that's okay. Technically, at this moment, 10 is over the 20, price is over the 50. This is still in a bullish posture. I know it doesn't feel like it, but the data says this is still a bullish posture. Next, go to Kavan's tabs here. FinClub, our artificial intelligence data needs to be green, which it is red today. That's okay. Just data points at this point. So today is a red day. And finally, the MMFI, our market breadth indicator. You can get that at barchart.com. It's free. It's at 47%. So this is the percent of stocks above their own 50-day average is now down to 47%. Now, what we want to see is this over 50%. I think Kavan wrote down, yeah. So we don't have a confluence of signals here. So this says that the market trend is not trending in any particular direction at the moment. It's trying to figure out what it's going to do. So that makes today a defensive day. Today is a defensive day because not all market conditions are lined up, but we are already in the market, and we will not add to new positions. So let's take a look. Cine has already gotten out of his RCL. Okay, no problem there. Kavan says, that's one of my coworkers' notes. You know what? That's great. That's great. Somebody else making notes. That is so awesome. All right. So the only thing we're going to be doing today is checking our planned exit points. Is it time to get out, or do we stay in? That's really all we're going to look at today. That's what makes 10-minute trading so easy sometimes. Let's go through each one of our positions here and take a look at them. All right, KHC. So we're following the 5-day. Now let's ask ourselves this, right? Our profit's locked in, and we measure that by saying, is the trend line past the entry point? The trend line we're following is the gray one, and it is past our original entry point, not quite past our second entry point. Okay, remember, we start it over brand new when we add. That's okay. So now, because it is a no, profits are not locked in on the second entry, we go through these. We find the least risk, and that's the one we go with. The least amount of risk is at the backtested trend line, yesterday's low, or a half ATR. Well, half ATR would be somewhere down here. Yesterday's low was 39.49, and so that really means the backtested trend line is what we're going to follow. So we're going to move it up to 39.72. And just like that, we are done with KHC. Going to leave this one on. And moving into FE, which is literally the easiest trade I've ever made. This one, our profits are very locked in. It has been considered overbought for over a week now. So we did not add any positions. So we still are holding 1 unit of this. And remember, unit size is whatever is the right thing for your portfolio. Oh, Isaac just got here. Dude, I did a member highlight on Kavan because he's going out and he's sharing the good news to how to do 10-minute trading. I'm really proud of him. That was the big thing so far. As far as trading goes, all we've done is move up KHC. So now we're on to FE. So we're following the 5-day. So we're just going to move this up to 46.61. That's it. Done with 2 already. RCL. All right. So Cindy got out of this earlier today. No problem with that. Now, Cindy, I would make a point here. You got it. You got out because it dropped below 82.13. Okay. There's nothing wrong with that. Keep in mind, intraday volatility. Okay. Intraday volatility could be an issue. That's why I tell people, don't put your stop points, don't put your exit orders in the market, because they might get tripped intraday. And by the end of the day, which is the only data point we ever use, it may be beyond that and be fine. So all I'll say to that is, if you're putting this in as an order in the market, you might get stopped out when you didn't intend to. So with that being said, this one is below our planned exit point. So let's go ahead. Let's exit this trade right now. This is RCL. Oh, keep in mind, this is the one yesterday that was up on the news of cruise line bookings, right? And now top to bottom between these 2 points is 10%. That's why you don't trade the news. And look, this is like, a buck off our entry point. So it's not that big a deal. Let's go in. I'm going to close RCL. We're going to do it together on this screen. RCL. April 14th. 75 calls. We're doing a sell to close. RCL, April 14th, 75 calls. See where I get filled. By the way, if you haven't noticed, on defensive days, on every other day, we let our winners go. When something doesn't work, that's when we go in and close the trade. We're not going to tell our winners when to stop running. Let them run as far as they can. All right, adjusting the order here. See where I can get filled. All right, out of RCL. at 570. There it is. Out of RCL, April 14th, 75 calls at 570. Give you guys just one more second here. Out of RCL, April 14th, 75 calls at 570. All right, that one's off the board. Let's go to the next. Oh, actually, before I go, I'm going to mark it red where I actually got out. I'm going to say exit point closed below the what did we say? Yes. What was it yesterday? It was the prior day's low. Okay, that's it. Done. Just shake them off, move on, because we got great winners on the board other than that. Next, this is CVE. Let's go ahead and close CVE because it is below our planned exit point, and it's like 20 cents below, so whatever. But the point is that it is below. Oh, look. You know, CVE was doing great, right? We got in. It was moving up. It even intraday doesn't matter. Intraday doesn't matter. Intraday hit our second buy point. But by the end of the day, it was not there. And now it is time to close this trade. So we're following the 5-day. We're definitely beyond that. Let's go close this guy. April 14th, CVE. April 14th, 15 calls. CVE, April 14th, 15 calls. See where I can get filled. Oh, yeah, that's nothing. All right, out at 148. Yep, right there. CVE, April 14th, 15 calls, closed at 148. Give you guys just another second there. CVE, April 14th, 15 calls, 148. So if your portfolio looks anything like mine right now, I still have FE, KHC, and TMUS. And on those three, I have a cumulative gain of 74%. Pause for a dramatic effect. You just let your winners run. Let your winners run. And this is what it looks like. Okay? You don't stress. FE is up 125%. That's a good one. I like that. All right, we're done with CVE. Now to TMUS. We're up nearly 100% in TMUS. It says 95% on my screen right now. And in TMUS, we are following the 10-day planned exit point. So this, keep in mind, is starting to work. It looks great, and we're giving it a lot of room to breathe, okay? We're up to 129 on this one. It is currently at 133. What I want to do here, because it's right at our 10, our first entry point's already passed, our second entry point. Hang on, stumbling over my words here. Doing great. It's past the first entry point, right at the second entry point. We're not adding because today is a defensive day, but I do at this point want to go ahead and pull our risk in. So I'm going to make this no longer the 10-day. I'm going to move this up to the 5-day planned exit point. Reason being is because this is working. And I don't have to give up that much from $4, you know, when we can move this up to 131.60. 131.61 is where I'm at right now. Now, this is part of our strategy when we add to winners is we tighten up the exit point. If it's at the 10, we go to 5. 5 is the closest we ever get. Because this is working, but we're not having the opportunity to add more, I'm going to go ahead and tighten it up from the 10 to the 5. I hope that's okay, because in theory, this should allow us to keep more profits. So now remember, planned exit point means we're going to let it run, and at some point it will stop running and come back, turn the other way, and cross below that point. That's our exit signal. That's also how you don't have regrets, right? Kind of a preview for this Friday's webinar. You don't have regrets when you plan your trade ahead of time and you tighten up those moving averages as it works for you. Awesome. Okay, so that is all the trading we're going to do today. Tightened up KHC, tightened up FE, closed RCL, closed CVE, tightened up TMUS. That's it. So legitimately 45 seconds of actual trading. So hope that was okay. Hope you guys are caught up. Now let's go to the final thoughts. I'm excited about this one. What's your best trading lesson? So I like to find questions that people are asking. What is your best trading lesson? Some of my best trading lessons I put inside of your secret investing book. So I know you got one of those. What are your best trading lessons you ever learned? I want to know. I want to have that discussion real quick. Bob says, do you put an order in on the stock trade? No, I don't put in any orders on the stops because of the intraday volatility. Even if I'm trading the stock, if I'm trading the option, whatever the case is, I don't put the order in the market because there's intraday volatility. It might go down and then it might come right back up. And then you're going to be kicking yourself, right? You're going to have those regrets we talked about. But if you wait till the end of the day, following the plan, say, okay, I know it's below that point. I'm ready to get out. I'm going to get out now. Good question, Bob. Good question. So in the chat box, I got a couple minutes before I'm going to have to run, but I want you to type in, what's your best trading lesson? And I'll go first. So I have had the exceptional, extreme privilege to be mentored directly from Mark Minervini and my friend Steve Burns. And two quotes they said to me got me more than anything that I've ever heard. Mark said to me one time, "This is why your trades suck." That one hurt. That one hurt my ego really hard. I know you guys have heard me say that. And then Steve saying to me one time, I used to see, I thought I was being clever. I thought I was being smart. And I was showing him how I was being clever and I was being smart. And then he said to me, hey, you know what? I used to trade that way too. But then I realized I wanted to make money. Both of those were gut checks to me. But it's what I needed to hear. And basically, it was stop trying to be smarter than the market. The market's telling you what's going on. It's just like reading. Once you learn to read the words on the page, you see what the market's doing, and you just react. Those two right there hit me hard. Hard. All right. I see some lighting up here. This is so much fun. I love asking you guys. Brian says, trade in the afternoon and follow the trend. Yes. And when you trade in the afternoon, you don't have to worry about that intraday volatility, right? Because the end of day price is all that matters. And there's times, where it's 10 minutes before and the price will move more than you expect it to. That happened to us last week in Apple, right? It just happens. But yeah, trade in the afternoon, follow the trend. That's really easy. It's just two little things to know. Trade in the afternoon, follow the trend. Excellent. Isaac says, my best lesson is being able to get out at a predetermined risk. Yes. And the system helps me. Perfect. In the past, I've let my losers go to expiration with no bid a few times. No bueno. No está bien, señor. No, that is not a great way to trade. Absolutely. And I've been there. I remember specifically, and this was early days on in the podcast, where I had a trade on. I had an interview set up, and I was going up into the studio to make the interview, and like just sweating bullets, like, oh man, I really need this trade to work. Oh, please God, let this work. And on the other end, I'm trying to posture and be smart by being on the podcast, which clearly I needed a lot. I needed to learn a lot, and I have learned a lot. Thank you, thank goodness for the podcast for sure. But yeah, I know that feeling, right? You're looking at expiration, which is why we make sure we roll it a week out, right? We're looking at expiration. We're thinking if it's in the money, I'm fine. If it's out of the money, I'm good. It's flirting with the money. I don't know if I'm actually going to get paid on this one. And if I don't get paid, it's a big loser. Yeah, absolutely. But having that predetermined risk, super smart. Bob says, don't try drinking from a fire hose. There is too much out there and you need to find a single home. Very interesting. I like that. Yeah. I think what Bob's trying to say here is, spreading it around, trying to find what's working right now, right? Tesla may be working great at some point. FE is working great for us right now. but that doesn't mean that we're going to throw everything into that one. Absolutely. Very good. Cindy says, you don't have to enter a trade. Oh, that's a good one. Yeah. Yeah. And Cindy, there's going to be a few days where we have nothing on. We have no existing trades on, and we're not putting on any new trades, right? Those transition days, which can be frustrating. We've gone through those for a couple of weeks at a couple of times. You don't have to enter trades every 10, 15, 30 minutes. It's too much stress. Exactly. Straight at the end of the day, put all your trades at the same time, be in and out as fast as you can. Not like, oh, I got to go fast, but I mean, like, have a plan, execute the plan, and then be on, right? That's the way it works. I'll wrap with Victor here, and then I'm going to have to bounce. My best lesson is trading psychology is the most important thing to control. Yeah, dude. Victor and I spent 4 weeks on trading psychology, being aware that the mental games and emotions can lead you to big losses and tons of stress. Absolutely. The easiest way to avoid all of what you just said right there is position size, right? You structure your trade to have 2% of risk in your account. Then you don't have stress. You just take the losers, they run off, whatever. You let the winners run, and they're awesome, right? That's your best lesson, trading psychology. Yes, excellent. All right, Cindy. Hey, I know you got problems with that as long as hang on. I know I have no problems with that as long as we wait for the right opportunity. That's it. Right opportunity. That's the way I tell people. And I got that from Intervini. Like, I don't like to box myself into a certain style of trading, day trading, swing trading, whatever. I'm an opportunist. And that's the way Intervini describes himself. And that's the way I describe myself and what we do. We're opportunists. When we find an opportunity, we execute. If there is no opportunity, we just hang and wait. There was a Market Wizard quote. I'll leave y'all with this. There was a Market Wizard quote that I forget which one. You know, I've read all the Market Wizard. I've read hundreds of books, thousands of books. I'm at 32 books this year already. Yeah, book challenge. 32 books already this year. There was a Market Wizard book, and I forget who it was, but he said, I wait as long as it takes until the opportunity is so good, it's just like money is just sitting there in the corner, and all I have to do is just bend over and pick it up. That's what you do. You just wait for the right setup, and then you execute. Guys, thank you for coming today. I knew this was going to be a great day. I will draft an email real quick on the 2 that we closed, and then I will see you at the top of the hour on Benzinga, but I got to go meet with our friend, Mr. Money Mitch over there, a pre-show meeting, because I think we're brewing something sweet. I'll let you know tomorrow what we come up with. We'll talk later. Have a great day. Hey, don't forget, before you head out, head to secretinvestingbook.com right now to get your free copy of The Secret Investing Book. This is how to finally get a positively unfair advantage in the stock market. And it has 13 of the secrets that Wall Street does not want you to know. And I want to send this to you for free today. Just help me by covering shipping. And the way you can do that is by going to secretinvestingbook.com. That's secretinvestingbook.com, and I'll ship this out for you right away. Thanks so much.